Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, June the 19th. The year's 2019. Let's talk trading. Overload. When it comes to trading, it's so easy to get overloaded. You could get overloaded with books, with videos, with seminars, with indicators, with systems, with, instruments to trade. And the reason I'm talking about this is yesterday I got, I don't know, maybe it was the day that all the traders send out their stuff, but it was just an overload. And of course, my curious side, I guess maybe got the better of me, and I watched a video and, I read a couple of the emails, but I really find it funny how people, you know, this one person says, yeah, you got to listen to this other person. And then to me, it's just a bunch of gobbledygook because they use words that, sound good, that draw you in. Like, you have to know the market. Yeah, well, I mean, you have to know the market, but what does that mean? What does knowing the market mean? Well, you're going to have to study. Okay, yeah, well, what do I study? Well, they can never distill it. And it goes back to, one of my favorite Deming sayings. If you can't explain what you do as a process, you don't know what you're doing. And, part of the overload or why it works for these guys that go out there and market like crazy. I mean, I look at some of these guys' channels, their one video might have more views than like, all mine combined. It's because they know how to engage people's emotions. Whereas, I've always appealed to logic. And the truth be told, it's more effective to appeal to people's emotions. Like they say, tell a story, as opposed to giving facts. If you're a good storyteller and you've got, two or three really good stories to tell, you can draw people in or suck people in, depending if you're doing something positive or negative. If you really have a compelling story, something that, puts people on the edge of their seats and you can tell it, you can get them to do almost anything. If you read any of the sales books and sales literature that teach people how to persuade others, it's right there, storytelling. But I was listening to this guy and I just couldn't help myself. As I was listening, I was writing in the YouTube reply, because he starts talking about time frames and it's just like, oh, here we go again. So just be careful out there. Probably most of the stuff you get in your email, probably if you're watching my videos, I don't even need to tell you. You get that stuff and you just click delete or you click spam, mark it as spam and unsubscribe, because it's just, it's just a bunch of stuff that doesn't work, basically. And, if you follow some of that stuff, you will wind up losing. But if you do choose to follow some of that stuff, just remember to put your risk management in place. Always set your stop loss. Always, always, always. So never lose more per trade than you are willing to lose per trade. Because I don't think anybody goes up there saying they're willing to lose 50% of their account on any given trade. I just don't think that's the way they do it. Okay, here we go. Still one gap that hasn't filled. You can see here right now the euro yen on the weekly looks like a doji. Open and close. We're right there. We are pretty much, that's weird. High to close 50. Oh, that's because I'm using bid and ask. That's right. We're right there at the pretty much at the weekly open. So you can see we travel down. So now we're going to enter the lower wick zone on the weekly. So we're going to have to leave it. And which way it goes, we'll just have to wait and see. And right here, you can see we just touched that upper wick zone for the candle, 3 weeks ago? So this is how, using these horizontal lines, you can just look and see. You can see the price action, where it's bouncing or getting rejected, getting turned around. And we switch over to the daily. You can see we're still up for the month. Now we're up for the day. We opened below the previous day's midpoint, but then we crossed above it and we cleared it. So that midpoint trade, once again, we had a negative bias. So we went down here. We didn't make a new low. So as you're coming back, you might as well take profit off the table. Then you can see here, as we entered, we left that wick zone. So possibly you went long and you were rewarded. Maybe look to take some profit at that previous day's midpoint. But it cleared it and continuing on. And you can see here, first trading day of the month, we actually hit that high and it's pulled back. And you see here, first trading day of the week, yesterday we left it. Now we're back in that range. So you see here, we've got a couple of long triggers here, one at 0.64 and one at 22.12. And then, of course, there's the previous day's upper wick zone, which would also give you a long trigger. So there's a few opportunities to get long, but just remember, these videos are for educational purposes only, and your results may differ from mine. We're still above the first day of the month, trading day of the month open. We're still within that range, but you see we're about ready to pop out. Today could possibly close as an inside bar, and then we would look to have a breakout. So I just thought of something I could an indicator. Frequency distribution of inside bars. How many days are usually between inside bars? That might be interesting. I don't know if it would pay off at all, because either there's an inside bar or there's not, and you just wait for it. But it would just be one of those curious statistics. And here you can see clearly we went into that wick zone and back out. Range, we've got 4 over 100. The euro yen only 47. And I believe we've got FOMC coming out today. So it might prove to be volatile. And right here, it looks like the holo traders are getting a chance here. We might have a highest open reversal trade coming up. You see, you just notice how price got rejected by about, 3 pips there. Larry live trade. Oh, and maybe this is why it got rejected. There's the weekly open. Okay, pivot point inside the buy zone once again. So no strong bias, but taking that long, paid off, came up weekly open. Here, once again, using the wicks, horizontal lines, you can see if you were long, if you didn't take profit this time, it's telling you lower high, I'm coming back down. Take your pips off the table. Anybody can call that hairy hindsight, but the fact of the matter is, I tell you this stuff ahead of time, so when you see these patterns emerge, go ahead and do it. Okay, here we're going across that weekly open. I guess traders are trying to decide, do we want the euro yen up for the week or down for the week? Rat zone, we're in the red rat zone. Not much of a separation now, only 6 pips there. So take what you can get. You can see we almost hit that weekly pivot right there. We're back down here. We hit weekly S1. Now we're heading back towards the pivot. And we still have these 2 missed pivots for the month. And let's see, we've got today and then 7 more trading days. Anything could happen. Price action. Once again, just with the horizontal lines, you don't even have to think about the semaphores. But if price opens within an area, chances are it's going to close outside that area. There are exceptions, and you can see a few of them here. Or actually, not necessarily close outside the area, but they'll leave the area. But there are exceptions. So here we opened here, we left the area, but we closed in it. 1, 2 times we didn't leave the area. Open, we left, open, we left, open, we left. So, just simple things like that, saying, you know what, I might be able to bag, 2 or 3 pips. Well, if you do that 10 times, that's 20 or 30 pips. I mean, depending on your size that you're trading, that could be a daily profit. That could be daily income. I mean, if you're trading $100 a pip and you make 20 pips, that's $2,000. And here we have the wick zone showing in and out. Right here, you can see that same horizontal line, previous week's low. Nothing much happening at the tick level right now. We're only moving a few pips here. You see I opened the trading screen a while ago, because usually I'll open this trading profile after I do some trading, but when I started up the MT4, I started with this platform just to show you guys what can happen. So you see here, there was a short trigger here. It paid off for a few pips. And then we got a long trigger that's still paying off. So usually, like I say, when I open it, you might only get a little bit, but sometimes it's nice to see what I'm really talking about. The power of these horizontal lines. This is when I open the platform, and this is what's happened. So you can see prices moved up nicely. That's what, almost a 30 pip move. It's from here to here, I do believe. Yeah. So there you have it. So, fellow traders, try to keep it simple. Don't get overload. Don't overload your chart with a bunch of indicators. Don't overload your brain with a bunch of different systems and methods and teachings. Just find what works for you and just keep doing it over and over until it becomes boring. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.